All right, there we go. We have seen a nice little pullback in this market here. Bitcoin managed to top out at one of our key areas of resistance at $65,000, and we have now started to tumble down toward that $61,000 area of support. So this is still a pretty good situation in the market for me. I want to talk to you guys about where I think this can go, if we're going to be going significantly higher from here, or if this is going to be a collapse and we're going back down to the 50s. And, just to kind of start this off, I think the first thing to keep in mind, which, a lot of people really struggle with, and, I'm going to be watching things like sentiment to see where we are, but when we get significantly above an area of support like this, and in this case, let's say the area of support is 61k because it's a nice round number. We managed to get an entire 7% above, which was also our deviation amount, funnily enough. But we also, more importantly, we cleared some of these recent highs, right? Specifically this one right here at 64.7, which to me was very important. When you start doing things like that, these levels they come back in play. But where previously this level was an area of resistance, I'm now going to be quite confident that this area can be support again. And that's what makes this price action really interesting, because you see, when you produce a deviation like this, the next attempt is much more likely to serve as support, right? Same thing over here, and broadly speaking, same thing with these wicks as well, because they don't come as low as this wick right here. So to me, when you get that deviation, that gives you some level of insulation, that gives you some level of assurance that your subsequent attempts at the zone are probably going to be successfully used as support. Okay, so that's one of the things that I'd be looking for. Obviously, the risk is that if you don't actually capture support here, and I'm being generous by labeling it 61k, right? You could definitely say that the zone of support here is not 61k, but instead it's around 62, right? And that would actually be totally reasonable. Let me show you why. Right here, if we take a look at this, you can see a lot of wicks coming down into this range, right? A lot of bounces coming off this particular price area, some very, very healthy consolidation. And by the way, just ever so slightly below this level, you can also see the value area low for this market also coming in right here at about 61.2. It's actually been moving down a little bit throughout the course of today, right? I mean, if you just drew this is very interesting. If you just drew this, some hours ago, that value area low would be a little bit higher, not quite in this case, but it was up at about 61.5. So, it really depends on how you look at it. But one thing is for sure, if Bitcoin slides, a little bit lower than where we are right now, there is going to be some trouble for this market. And the reason I'm saying that is because if we do start to lose some of these important levels, we're now looking at, basically either setting that second deviation and coming back up, or this thing just collapses down. And, I've made my stance on this pretty clear. I'm not going to expect 2 deviations in a row where we do something like this. If we come back down, especially below these key areas of support, so, that could be the 60k area, and I'll help you define that in just a minute. So smash up the likes if you are excited for that. If we start sliding below some of those key kind of important levels in this market, then it becomes a lot harder to maintain that bullish case, and actually everything that was bearish in this market comes back into play. And what's worth keeping in mind is that even though we did conquer this high, which is absolutely fantastic, we are still, ever since the all-time high, in a pretty clear situation where the market is punching in lower highs in this market. And we absolutely have been punching in lower lows as well. So we're still meeting that textbook definition of a downtrend. And this is something which, again, a lot of people on YouTube, in crypto Twitter have problem digesting because it doesn't fit in with their emotional hypotheses. But obviously that's not what you come to this YouTube channel for. And what you'll understand quite clearly when you watch this YouTube channel for a little bit. Again, shout out to those of you that are smashing those likes up and subscribed and got that bell icon checked for the super time sensitive content. One of the things that you'll realize on this YouTube channel is that we are aiming to operate much more from principles than feelings. And we're doing that as much as we absolutely can. We're staying very conscious of that, despite how exciting or dreadful, how happy or scary this market can be. We're operating from a place of principles, okay? Which means that support is support, resistance is resistance. It's pretty obvious to say out loud. It's very fun for me to say it this way because, even though it sounds stupid, like I know that this is going to, click a lot of things in your heads, for some of you, for many of you, hopefully, because most people just don't get it. They understand this stuff and they learn the ABCs of all of this stuff when they start trading. But when it comes to the practical implementation, they're just not able to keep these things in mind. But you come to a YouTube channel like this, and that's exactly what we're able to do. Now, before I continue and tell you about some of those invalidations and talk about the upside here, I do want to highlight the phenomenal offers that we've had available to you guys with the links in the description. A lot of you guys have taken advantage of this already, so shout out to those of you that have. You've gained amazing access to huge amounts of capital that you can trade with. These exchanges that are linked down below, when you start trading using my links here, which means you make your deposit, start trading, they're going to give you huge cash bonuses that you can trade with, right? Bybit's going to give you up to $30,000, and that is free money that you can trade with in the market. Any profits you generate are yours to keep. BingX is a phenomenal alternative, and they do not even have KYC, and they're offering over $100,000 in bonuses, which is absolutely sick. So super, super cool stuff there. I've also highlighted to you guys in my last video with this direct contact link that I'm running a 12-week coaching program. Just me and you directly. We're going to be talking on the phone for 12 weeks. It's pretty intense. It's something that we've ran very, very similarly before with amazing results. If you want to get in, reach out to me here. It's not cheap and it's very intense. But if you want to accelerate your trading, turn it around, whatever the case may be, you are going to be following in the footsteps of people who have made phenomenal results working directly with me. I'm super, super excited for it. So reach out to me here if you are interested. We'll talk about that a little bit later on. I'm losing my voice, but let's come back to the market here. And one of the ways that we can actually try and identify what those like invalidations would be is using things like the value area low that I just showed you with the fixed range volume profile. So we've already gone ahead and done that, and that's shown as that 62. I'm sorry, here we are. This is slightly different now. This actually varies depending on the chart you're looking at. This is 61.6. You know, I'm not like super interested in the precise level. You should be, but you know, a little bit of variance is okay for me. You know, and so, you know, this same chart from the same levels is showing me 61.2, and that's totally okay. I'm just going to drop a line here because this chart is just easier to work with. I have to make it clear, you know, I don't care if it's 61.2 or 61.6. I'm not like such a degenerate like 15-minute time frame trader. So, you know, these like little $400 price moves don't actually make a difference, especially when I'm looking to build confluence. And I'll show you why in just a second. The next thing that I want to do is go ahead and throw some Fibonacci's on here, right? And these Fibonacci's are going to be able to show me where these potential retracements can come in. And there are some really nice Fibonacci's to throw on this chart. The first one, I'm just going to start it off from this low up to the high that we set here. It gives me a very interesting 618 retracement coming in right here. Okay, so let me go ahead and draw a box right here so we can remember this, because I'm going to be removing the Fib now. I'll just put a box right here in this price range, right? That's our 618 Fibonacci. We're going to remove this. And so that is another potential bounce zone. Now, the next Fibonacci I want to look at is up to this high over here. That's the $67,000 high. And why is it that high? Well, because that's just like a broader zone in the market. And that allows us to punch in another Fibonacci 618 golden pocket. Again, I'm most interested in these golden pockets because they're the most important Fibonacci levels in my experience. And I'm going to go ahead and remove this. So we've got two very nice golden pockets here for potential retracements for Bitcoin. They're both coming in below the value area low. If I go ahead and zoom out and I draw another Fibonacci now from the same low but up to this high, that's a very important high. We are in one of those zones right now. Now, I think one of the key things that you're going to start to understand with me drawing all these Fibonacci's is that important areas in the market rest basically where we are now. You know, we can drop another couple $1,000s lower, but we are in a very important pivot range for the market. What I don't want to do, and what I don't want you to do, is get interested in going long, but get caught up about where you go long. And then you take yourself out of a bad position because the price drops a little bit lower and then comes back up. Anything going down to these levels to me are okay for Bitcoin to fall down to. The lower we drop, the worse it is, because you want to see nice, big, explosive rises up, and you don't want to see the price tumbling down particularly low, especially because you want to see higher lows being punched in here. But what's very clear just from these areas is that regardless of how local or slightly broader or much broader you draw your levels, and by the way, we can just draw another Fibonacci up to the all-time high just because, you know, whatever, just to be thorough, and it comes in at basically the same place. I don't want to keep doing this from every single level because it becomes a little bit unreasonable, and you know, this is something that I've been talking to you guys a little bit about over the recent days on this YouTube channel. You know, a potential trap that a lot of people actually fall into, which I want you guys to be aware of, like where analysis just becomes a little bit silly. We're not interested in that, but what we're interested in looking at is that from different perspectives, where would your invalidation be? You know, and we've got a really, really good sense of that now with what we're looking at now. Basically, I think it's fair to say that anything lower than about $59,000, you're in a pretty ugly place. And I think that makes sense. You're coming in below all of these wicks. You're coming in almost below this wick here, and you're in the very bottom of this deviation range. This is a very bad place to be. Revisiting this range, in my opinion, means that we're probably coming significantly lower because we're just not really demonstrating much strength in the market, right? And then we're going to have to come down to our next area of liquidity in the market, which is going to be down here at about $52,000. So that to me is kind of like a real danger zone. But anything above that, I'm pretty confident with Bitcoin. I'm pretty happy with where Bitcoin is right now, especially because we managed to get above that high right there. And so that's something which I'm going to be paying attention to. Now, if we do manage to get support anywhere down up to here, and by the way, if you want to know like the key level for me, the most important level for me is the 61 range, right? 61 to 61.5. I am willing to tolerate anything above 60K. So basically this Fibonacci golden pocket and higher, I'm willing to tolerate. If we get anything lower than that, then I don't want to see it, right? I don't want to see any prices below, like in this box. Let me make that red. I don't want to see any prices in this box. Like anything down here to me is not good enough. But other people might be willing to tolerate lower prices. So that's why I'm kind of highlighting this to you, because this is really going to depend on your own risk tolerance. But I'm good. Like we can drop all the way down here, and honestly, I think it's a good thing. I think it's a totally good thing. I'd be very happy with it. Now, if we do start to rise up, let's talk about invalidations for this bearish side. I think the key invalidation now is going to be getting above this high. If we can get above this high, it's, that's it. I think we're right up to the key level at $67,000. It's only $2,000 above anyway. And I think that this would be the next key important resistance level to break. Because we've already topped out at 65K. And because we're now tumbling lower, potentially in my situation as low as $60,000, I think it should be very easy to break this area of resistance. You see, the more you top out and the more you trend in the opposite direction, the more fuel you actually have to break these resistance levels. So I'd be pretty positive that 67K shouldn't be a particularly huge problem for Bitcoin, and that we should be able to rise higher than that from here. That would be very exciting, because if we can penetrate this area of resistance, the next key resistance we have is going to be right here at about $71,000, because this is where the market produced some really nice, kind of retracement price action, some heavy resistance hits as well. And so that would be the next key area of interest on the chart. I think that almost no matter what happens now, if we get up to this area of resistance, we're probably going to smash right through it. But I think this could be the next important area of resistance. I don't think it's going to hold Bitcoin back. I don't think that this area of resistance is a problem if we break 67, but it is a potential area where, we could do something a little bit like this, right? And then come back up, right? I mean, that would be the best case scenario. This is like the healthiest kind of price action that you could ask for. So that'd be absolutely great. I think a lot of this depends on the S&P 500, and we've seen the S&P 500 open here, and it has gotten above my area of resistance now over here. I don't see any more resistance for the S&P 500 other than its all-time high. You could argue that this entire range is resistance because the S&P 500 traded sideways here for a decent amount of time, about 3 weeks. I'm not necessarily going to make that argument, but I'm open to it because it looks like this has become a very small local top here. We are only in the middle of the trading week, and there are a good 2 hours left in this trading session, and then we've got Thursday and Friday as well, right? So I'm not too worried. It's been a very bullish week for the S&P 500, and now that we've gotten above this area of resistance, I think it's looking pretty good. Interestingly, the dollar, we were talking about this, it fell down to an area of support. I drew this squiggly line to show you that support is where bounces happen. That's exactly what happened. I think that's why Bitcoin is struggling right now, but that does place the dollar back in resistance, right? So if you're expecting the dollar to continue to drop, and if you're expecting the S&P 500 to continue to rise because it's gotten above this area of resistance, then it's looking good from that perspective. I'm not closing off my idea completely that the S&P 500 could be retracing, but I do want you to be aware that the S&P 500 could be producing a pattern that looks something a little bit like this, where if I fill this in, we have got a potential symmetrical triangle forming here, right? And these are typically going to be bullish because we formed them inside of a bull trend. So I do want to make you aware that we could be developing that kind of pattern as well, and that's something I'm going to be continuing to watch out for. Interestingly, we saw Bitcoin's dominance rise up in response to this rise. Ethereum got hit pretty hard, lost a little bit of value against Bitcoin here. Other altcoins got hit much harder as well. Here's Matic just not able to even maintain that 70-cent price area. Solana, of course, the star of every show, also sliding down from its high at 159 down to its current price at 146, which is an 8% drop here. So definitely fairly sizable. What was Bitcoin's drop, just out of curiosity? Yeah, Bitcoin dropped by about half of that. So that's definitely interesting. So I think, Bitcoin's invalidation is going to be 65, but if we can get above that, I think we smash through 67 and set, potentially brand new all-time highs in the next month or so. In terms of dropping down, I've still got a little bit more that I'm going to tolerate for Bitcoin that I actually want to see. It would be nice if Bitcoin can come a little bit lower. But what I'm looking for, and I cannot stress this enough, what I'm looking for are these quick bounces, right? I want to see that there's just one sharp bit of price action and then we're straight back up. I don't want to see fucking around like this, a little wick down, and then whatever like that. This is not going to give me confidence that the market is going to recover. I want to see that it's a very quick, sharp reaction. People are buying because they're very, very happy to pick up Bitcoins in the very low 60K range. And basically that's going to show me that we are with good levels of confidence, showing that this low is not going to be returned to, and actually we are happy to buy at this low over here because it is we have more FOMO. Basically, there are less sellers and there are more buyers ready to step in. That's what you want to see. I think right now the facts are still the facts. Sentiment jumped up very high, too high. We're at a reading of 64 right now. A few days ago it was a 43. 2 days it jumped up by a massive margin. I mean, absolutely crazy. So I still think sentiment is far too stretched out. I still think people are far too long heavy. But at the same time, the technical picture has definitely improved because of this massive 15% pump that happened in just about 5 days. And at the same time, we are still in a downward trend. So I think that's why you're seeing this kind of unsure atmosphere in the market now, because both sides actually have really good arguments for their case. If you're bullish, you have a really good argument for being bullish. If you're bearish, you have a really good argument for being bearish. And you hopefully are going to be more equipped to make your own decision on which side of that you stay on. At the moment, look, I value horizontal levels more than I value, situations like lower highs, even though this is the dictionary textbook definition of a downtrend. I do still value horizontal levels more. So to me, this is just more of a bullish picture, but I'm not attached to it. And if you can't make your decision, that's okay. You don't have to make a decision on everything. You don't have to trade everything. There are going to be situations where you have more clarity, and that's where you put your money in. You're not, no one's forcing you to trade. You don't have to be trigger happy and shit like that. Just take it as it comes, chill, relax, ABC, bro. Always be chilling. That's what we're all about. If you want to get in on the phenomenal coaching offer that I've just described to you earlier on in the video, that is 12 weeks, very, very intense, super amazing results we've seen out of this, then feel free to reach out to me here. And if you want to gain access to some phenomenal cash bonuses that you can trade with, check out these two exchanges linked down below, where you can get huge bonuses when you do start trading using my link in the description below. I do want to highlight that, a good few of you have, for example, signed up to Bybit, but you haven't got your bonuses yet. The reason you haven't got your bonus yet is because you haven't done your KYC and you haven't started trading. So you need to do that for them to give you this bonus. But once you do, you can take your money off the exchange and do whatever you like. That's your business. But you will be able to trade with the free money they give you. So that is super, super cool. All right, ladies and gents, thank you all so much for watching. I need to run. I'm very late, and I'll see you all in the next one. Cheers.